Good day, everyone. Today we will analyze the financial situation of Nestle company and give our recommendations. This presentation was brought to you by our team consisting of Adam Alfred, Kuat Sething, and me, Darshini Palanisamy. These are the contents we will be presenting, which is Introduction, Company Overview, Financial Analysis, Comparison with Industry Benchmarks, Key Findings and Insights, Strength and Weakness, Investment Evolution, Recommendation, and Conclusion. The purpose of analyzing Nestle within the global food and beverage industry is to understand how it maintains its competitive edge through resilience, adaptability, and innovation. The analysis explores how Nestle adapts to market changes and addresses challenges like supply chain disruption and regulatory compliance. Additionally, it highlights Nestle's contribution to societal goals such as sustainability and health, providing insights into how a global leader balances business objectives with social responsibilities. Nestle, renowned for its global presence, extensive product portfolio, and proactive approach to market and environmental challenges, was chosen for this report. The company's innovation across diverse categories, commitment to sustainability, and adoption of digital technologies for product development, e-commerce, and customer engagement demonstrates its forward-thinking strategies. The report aims to explore these factors and extract lessons applicable across industries. Nestle, founded in 1866, is the world's largest food and beverage company with over 2,000 brands and operation in 190 companies. It offers coffee, infant nutrition, confectionery, dairy products, pet care, and plant-based foods. Nestle mission is good food, good life, and it employs over 275,000 people. Nestle, despite facing competition from major players like Unilever, PepsiCo, Danone, and Mondelez International, maintains a leading position in the trillion-dollar global food and beverage industry due to its extensive product portfolio and global supply chain. That's all from me. Now I pass to Kwat Sething.
Thank you, Darshini. Now for the financial analysis part. Nestle's inventory turnover ratio has grown from 2022 to 2024, indicating that the company is improving its inventory management efficiency. Higher turnover suggests that the company is selling its goods more rapidly, which indicates operational efficiency. The receivables turnover ratio falls somewhat in 2023 but increases dramatically in 2024, This implies that Nestle is increasing its efficiency in collecting receivables, which boosts cash flow and lowers the risk of bad debts. Over the past 3 years, the debt ratio has stayed reasonably constant, ranging between 0.56 and 0.57. This shows that Nestle has maintained a steady level of financial leverage. A debt ratio of less than 1 indicates that the firm has more assets than obligations, which is a good sign of financial stability and minimal risk. The rising net profit margin implies that Nestle is getting more effective at transforming sales into profit. This improvement reflects more effective cost-cutting and pricing tactics. Nestle's continual improvement in ROA means that the company is strengthening its capacity to produce profit from its asset. This is a good indicator of proper asset usage. The rising ROE indicates that Nestle is providing larger returns to its shareholders. This demonstrates high profitability and effective utilization of equity resources. Now for the comparison between Nestle company with industry benchmarks. Nestle's current ratio and quick ratio are slightly above industry average, indicating strong short-term liquidity. Higher inventory turnover and receivables turnover ratio show efficient asset management. Nestle's gross profit margin was 48.5%, better than the industry average of 45%, reflecting efficient cost management. Nestle's net profit margin was 13.5%, compared of the industry average of 20%, indicating higher profitability. Higher EPS and PE ratios reflect strong profitability and positive investor expectation. About the key findings and insights, Nestle has demonstrated strong financial performance and growth despite global challenges. In 2023, the company achieved 484.5 billion ringgit in revenue with a 7.2% organic growth rate and a 23.7% increase in earnings per share. Innovation has been a key driver, with a 15.1% increase in e-commerce sales in 2022. Additionally, Nestle's commitment to sustainability is evident with a 13.5% reduction in greenhouse gas emission from the 2018 baseline. These achievements highlight Nestle's robust financial health, innovative capability, and dedication to environmental responsibility. Nestle's strengths include its high brand value, being the world's most valuable food brand in 2024 at 102.8 billion ringgit, which attracts investors and builds customers' confidence. The company has shown strong financial performance, with 225 billion ringgit in sales in the first half of 2024 and a 2.1% organic growth rate. Nestle's efficient R&D system, with 8.8 billion ringgit invested in 2024, keeps it ahead through continuous innovation. Its global presence in 188 countries with 340 plants allows for market dominance and adaptability. Additionally, Nestle's commitment to sustainability is evident with a 13.5% reduction in greenhouse gas emissions since 2018 and a goal of 100% renewable power by 2025. However, Nestle faces some weaknesses, such as a complex organizational structure that can lead to inefficiencies and slow decision-making. The company has also dealt with controversies and legal issues that can harm its brand reputation and consumer trust. High advertising costs are another challenge, requiring significant investment that might reduce profitability. Nestle's global operations expose it to economic fluctuations and currency exchange risks. Lastly, its dependence on key markets like the US and Europe means that regional economic and political instability can significantly impact its performance. That's all from me. Now, pass to Adam.
So, we move to investment evaluation. First, we have opportunities for growth. The expanding middle class and rising spending among consumers in Malaysia are helpful to Nestle's Malaysia. Developing healthier product is in line with the global trend of consumers becoming more health conscious. Then, we gotta talk about staying competitive. Brand awareness and a large market share increase resistance to competition. Investing in e-commerce platforms and digital marketing expands the client base. Then, we move to industry customers. Due to the consistent need of consumer basics, Malaysia's FMCG industry is stable and has a bright future. Predictable operations are supported by legal stability, although issues like inflation and supply chain interruptions still exist. When we speak about recommendations, we talk about purchase suggestions. The reason is Nestle Malaysia exhibits strong financial foundations, steady expansion and adaptability in a crucial sector. It is a wise investment because of its capacity to adjust to shifting consumer preferences and continue to turn a profit in the face of difficulties. How do we justify that? We talk about risk exposure is decreased by financial characteristics like steady cash flow and strong brand equity. Long-term value is represented by growth prospects in e-commerce and new product categories. For investors who prioritize income, steady earnings from the dividends offer a consistent return. However, when we talk about risks, it is necessary to keep an eye on the possibility of increased expenses and competition. Short-term performance may be impacted by economic hazards like inflation and currency volatility. In conclusion, Nestle Malaysia is an established brand in the non-financial sector due to its good financial health and strategic flexibility. The business's steady revenue growth, strong cash flows, and high profit margins demonstrate its operational effectiveness and flexibility in response to changing market conditions. Although obstacles including growing expenses, fluctuating exchange rates, and competition, Nestle is well positioned for long-term success thanks to its proactive strategies, which include growing its product lines with a health focus utilizing digital channels. Nestle is an attractive investment because of these advantages: consistent dividend payments and potential for long-term growth. For investors looking for stability and consistent returns, the company's excellent fundamentals and market leadership justify a buy recommendation despite short-term risks. And that will be it for today. Thank you for joining us on this amazing journey where we talk about Nestle Malaysia. Hope you have enjoyed. Thank you.